This is Fintech Takes, the podcast keeping you in the loop on all the latest fintech trends, news, and ideas. I'm Alex Johnson, creator of the Fintech Takes newsletter, your host and self-confessed fintech nerd. Let's go. Okay, well, this is a very special live edition of the Fintech Recap podcast. My name is Alex Johnson, the creator of Fintech Takes, and I am joined, as always, by Jason Mikula, creator of Fintech Business Weekly. Jason, it's great to see you in person.
I was going to say our first in-person encounter of 2025.
It is indeed. And the first, I think, live podcast that you and I have done together, at least since we were also joined on stage by our friend Jason Henrichs, who is also here, Jason number 2, or Jason number 1, if you prefer to think of yourself that way. Thank you for hopping on Fintech Recap as well. We're delighted to have you.
And for lending us the equipment, I guess.
Well, yeah, this is your show, man. This is
literally your show.
I promise not to derail it, and I can't promise not to swear this time.
Okay.
There may be swearing.
Okay, well, that's fine. None of us represent the views of our employers, so we're fine there. I'm trying to get Kia to swear on the podcast, but we haven't gotten there yet. I know. I'm still working on that. All right, so as we do on this show, we're going to run through some news stories from the last month or so of what's been happening in fintech. Henrichs, I don't think you've been on the show when we've jumped in the boat and gone to BaaS Island. Should we take a quick trip?
There should be no tourists on BaaS Island.
Well, you're not a tourist. I like to think of you as like a survivor from the last time the volcano blew up. So you can just hang out with us. But maybe, Mikula, can you walk us through some of the stuff that's happened since the last time we talked?
Yeah, absolutely. So a couple of interesting developments. The most headline-grabbing one that is based on a filing in the Synapse bankruptcy, but not actually one of the immediate parties to the bankruptcy. I've learned a lot about navigating and interpreting court documents.
You have.
Basically, the situation is a former Synapse employee is seeking to use the company's D&O, directors and officers, insurance policy coverage in relation to a legal expense, which, if you read through the document, is a subpoena from the Southern District of New York Department of Justice.
Bum, bum, bum.
I will say that that's consistent with other sources I've spoken to about the idea that there is some sort of open criminal investigation, open grand jury looking into the matter, including issuing subpoenas for documents and testimony related to the case. I also understand that in addition to SDNY, that local office is coordinating with Maine Justice, meaning like the Maine DOJ, as well as the Money Laundering and Asset Recovery Section, MLARS. What this means in practice, and when we may learn what, if any, criminal case could come out of it, who knows? Mm-hmm. And then the second quick tidbit, and actually you're the one who brought this to my attention. So
I did.
Thank you.
Yeah.
I'm usually on top of the BaaS news.
I got to one before you. I was very proud.
This is why I have to have a good network of friends, informants, and spies.
Well, you were the first person I thought to text. I'm
I gotta
texting
text
Jason this. Yeah.
This is why I'm glad we're on a text chain friendship relationship.
That's right.
Patriot Bank, which is an OCC chartered bank, in an 8K filing revealed that it had entered into a material definitive agreement with its primary regulator, the OCC. The information contained in the 8K basically made it sound like this stemmed primarily from BSA AML issues. No surprise to anyone who's been following the BaaS and partner bank space. There were a couple of notable elements, the most significant one being that there were elevated minimum capital requirements, which we've only seen in, I think, a very small number of these BaaS-related orders, and that the OCC has designated the bank to be in troubled condition. That's the recap on BaaS Island. What's your response to that?
Well, I mean, maybe Henrichs, you can go next on this. I mean, what jumps out to you there?
Well, I mean, we talked about this with Kia months ago,
Sure,
maybe a year ago, it was warm. That's all I remember. It was still warm. Was
so not now.
The question that was raised by Kia was: is it a matter of when, not if, there were going to be criminal charges, or at least criminal investigation in regard to Synapse and Evolve? And my point at the time that I'm going to stand by is that amount of money does not go missing for that long. Unless someone is moving shells around to, further disguise it, right? And, with McWilliams at the helm, the fact that she has not been able to get to the bottom of that as a sophisticated attorney with deep regulatory, ties and ability to navigate says, something is afoul, right? Like something does not smell good in the state of Tennessee.
Arkansas, technically. I mean,
depends where the smell emanates from.
Mentioning the McWilliams, the Synapse bankruptcy trustee and former FDIC chair. I mean, something I'm very interested to see is with the presumably impending turnover at the federal bank regulatory agencies. In the bankruptcy hearing, she mentioned, I'm going to be in touch with the new people in these roles on January 20th. And I believe she said something to the effect of, like, it's both a warning and a threat, something to that effect. Which, I have to say, I've been disappointed at the lack of at least any public involvement from the FDIC, OCC, and the Fed as far as sort of helping get this to some sort of resolution. I have no idea what's happening behind the scenes. But based on McWilliams' comments, it sounds like they haven't been, particularly supportive of getting this to a resolution. Hopefully, new leadership provides a fresh opportunity and maybe a change of posture there.
Yeah, I mean, I think that kind of the thing you guys are both touching on that I agree with is what is possible through bankruptcy proceedings is just very limited, right?
Yes.
And we've listened to those calls multiple times. I know Jason's been on every single one of them where it's they all get on, they all give status updates. Nothing really changes. There's no ability for the judge to do anything. There's no ability for McWilliams to do anything. And so nothing really gets resolved. And I think that you make a really good point about the regulatory agencies like McWilliams, the judge, all of the customers involved. They're all begging the regulators to get involved. And at least publicly, we haven't seen any of that happen. So that's one avenue where they can put pressure on and try to get to some type of resolution. But I want to go back to what you said, Henrichs. I mean, I totally agree with you. I was initially more on the side of taking the bet that this was more just reconciliation clusterfuck. There you go. There's your first swear word.
Did you get to do a shot of hot sauce?
I might have to, yeah. We have Breaking Bank's hot sauce here, courtesy of Mr. Henrichs. And the longer it's gone on, to your point, that's where it jumps to my mind as oh my goodness, we have a problem here, because at a certain point, no matter how tangled the knot is, you should, if you're patient and experienced at doing that, be able to untangle it, at least to some degree. And the fact that we haven't made much progress there definitely suggests that you're right. There is some money missing due to some cause. And I think the fact that the Southern District of New York is getting involved now certainly suggests that they're exploring that angle. And I would agree that that's probably where that lands. Real quickly, before we move on to our next topic, as it relates to Patriot Bank, I mean, I guess this seems very consistent with the last 18 months in terms of small bank, unprepared to dive into the world of banking as a service, fintech partnerships, that kind of stuff. BSA, AML is always where they get hit relative to other things. I guess the troubled condition was the part that, as you pointed out, stood out. I don't know. I mean, I guess my initial reaction to that is just that this is another illustration of how far down the spectrum of banks from a size perspective fintech companies were going looking for partner banks. At a certain point, size and sophistication of the bank does enter into things a little bit. Henrichs, what's your reaction to that?
I mean, I think about something you had said around Evolve and the lack of oversight being a feature, not a bug.
Yeah.
Right. And it raises the question, not on your list of news items, but I think looking at CBW Bank being sued by the FDIC. And what I find interesting in the last week is that you have an America's brief from the ABA the Bank Policy Institute, which actually is the biggest banks. Like that's their, in addition to the ABA, they have their own separate lobbying group.
Yep.
And interestingly enough, the National Bankers Association, which represents minority depository institutions. What I find interesting is if you look at the BSA AML trouble that CBW has ostensibly found itself in, and the size of the fine that they say is forcing them into a troubled condition, right? Which raises the question, though, it's like for that size of bank, it seems like a very large fine. But if you look at the size of the business and the lack of controls related to it.
Well, and fintech allows you to really expand the scope of the things you touch without being a big bank.
Exactly. And they had two people with limited experience in BSA AML, one with limited experience in banking. Right? To say, well, wait a second, like we can oversee billions of dollars of cross-border payments and with relatively little oversight and without systems to do monitoring.
Including with countries that are, considered to be higher risk jurisdictions like Lebanon, Cyprus, et cetera.
Yeah. What could possibly be going, wrong there with a small bank in Kansas facilitating billions of dollars of transactions? But I think what this highlights is not just fintechs, right? Because look at TD as well.
Sure.
BSA AML is a hot mess.
Yeah.
And we really want to fix it. No one will touch the Patriot Act because we're afraid of hitting the golden goose, as it were, right? But it needs to be fixed. Like we have not. It is ineffective, and it is both a KYC/KYB issue and an AML issue, and that should know no political party. But here we are, where, this is what the banks are getting hit with. And I hate we didn't know, or we were small, or we didn't have the oversight. Well, then you shouldn't be doing it.
It's hard to argue with that.
Yeah, I would agree. All right, let's quickly jump to two more stories I want to hit real fast. The first one is Ramp, which just launched a new product, Ramp Treasury. Did you see this one, Henry?
I saw that one.
So this is basically a combined operating account, which is FDIC insured, pays 2.5% interest. It's with First Internet Bank out of Indiana, which I believe is actually integrated with Ramp through Increase, which is a banking as a service middleware platform. So there you go. And it's that product combined together with an investment account that's sort of paired with, and that's a money market fund. The rates are currently around 4.3%. So the idea is by sort of tying an investment account to a high yield business checking account, Ramp is giving its customers the ability to sort of shuttle money back and forth between the two to obviously have some yield being generated at all times. And 2.5% is certainly higher than probably a lot of business bank checking accounts are right now. So that
especially for Ramp's target customer, it's small business.
Exactly, right. So they're probably not keeping it in some very sophisticated high yield business bank account. And then on top of that, the ability to move it in when you're not using those funds for funding your operations into an investment account where you can generate even more yield. There are no fees, there are no minimum deposits, no transfer limits in between the operating account and the investment account. Although interestingly, and this was something that our friends at Brex pointed out in a somewhat competitive and combative tweet, there are some limitations on the ability to deposit checks, to receive external payments, or receive transfers from bank accounts that already weren't linked to Ramp, or to make payments outside of the Ramp platform, which I think is actually pretty consistent with Ramp's sort of closed ecosystem ethos for building products. They're kind of like the Apple of B2B fintech in some ways. Like they like to build one closed ecosystem that creates a great experience. The other thing real quickly on this that I thought was interesting was it did seem to have some integrated rules and automations, as is very common with Ramp's products, that are specifically designed so that you're keeping just the amount of money you need in there to pay your bills. And they have, accounts payable functionality built into Ramp. And then every extra dollar they want to try to move into that investment account and make sure that you're maximizing that yield. And if you think about on a personal level, or if you run a business, that's always the challenge, right? Is I need enough money to pay my bills, to make payroll if I'm a company, but I don't want a single extra dollar not earning the most yield. And so that nailing that optimization is tricky, but if anyone can do it, it's Ramp. Henrichs, maybe I'll go to you first. What was your reaction to this one?
Well, first, I'm surprised you didn't bring up because you like to go against the self-driving money. And I looked at it and I'm like, aha, Alex Johnson's going to say self-driving money.
I thought we sunset that term already, though. I never cared for it.
But it's actually a good...
it's a step in that direction, right?
It's a step in the direction, right, and has real utility. Here's the part that I found really interesting is we always talk about that the incumbents should be learning from the fintechs. But you know what? Do you know who does this really well? Chase. Yeah. Chase does this.
Yeah.
And so Brex can complain all they want. I think Brex is doing it well. I think Ramps is doing it well.
Sure.
But they are now copying the incumbents that do a really good job on Treasury.
Yeah.
And I do think, though, that this is the tip of the iceberg, that I think one of the next battlegrounds really is going to be around small business, treasury, and payments.
Yeah.
Like it's that intersection is actually very much a blue ocean opportunity within banking and fintech.
I mean, I think that I'm going to use a phrase I make fun of people for using all the time, but like democratizing these sort of sophisticated treasury management tools that, a significantly larger corporate customer of Chase may have, and like bringing that down market to like an SMB customer, I think is a good thing.
Yeah. Yeah, no, I agree. I mean, I think the interesting thing with this space, and you highlighted it, right? Like Brex does this well, Ramp does this, Mercury does this, Arc does this. There's a bunch of folks who do variations of spend management, business banking, treasury management, sort of lumping them all together. The interesting thing to me is they all focus on serving high growth startups and like VC backed companies. And Brex had a bit of a period of its history where it tried to go into the SMB space more broadly. It decided it didn't like that and it kind of backed out of it. And so, Mikula, to your point, the thing I wonder about a lot with this kind of stuff is how far down market can you go? And I think small businesses could use a treasury management function that sort of replaces a treasury management officer or employee.
Well, they don't have a TMO, right?
Right. They don't have that, and they're never going to. No. But it doesn't mean that they shouldn't be earning yield on their excess deposits that aren't going towards operating expenses.
Totally.
And so I'll be curious to see if this does penetrate down further. Mikula, maybe one more quick story.
Okay.
Since you've been doing sort of hostage video watching, but you've been making sure that like the CFPB is continuing to run smoothly.
So we're here recording this on the 23rd of January. As I recall, President Trump said day one, Chopra's out at CFPB, but he's made it, 2.5, 3 days already.
72 hours in cash.
And has really been churning out, both before the change in administration and continuing through, at least based on his Twitter, through to today, a rapid fire set of press releases, rules, enforcement actions, removing medical bills from credit reports, suing Experian, finalizing the Financial Data Exchange as the standard-setting organization for open banking. Big one.
Yeah.
Actually, very interesting research report on BNPL, which I would recommend people read because it really counters some of the myths and narratives that I think that industry sometimes leans into.
Yeah.
I mean that it's better than payday loans?
Better than credit cards.
Yeah.
Or that it's for people who don't use credit cards, but in reality, it's for people who use both. And anyway. Fining Cash App for its quote-unquote failures to fix fraud on its platform, Honda auto financing. So been a very, very busy guy. How much time do you think he has left on the clock?
Checking the time. I mean,
by the time this comes out, it's super likely that he will be out. I
feel like that's most likely the case. Yeah.
I've been, not hiding this under a bush very well for a long time. Like I had my struggles with the CFPB from the outset. I feel like it was weaponized as a bureau under Warren, and I think it went too far. I think Chopra has gone too far in some cases in terms of what they can do, but I do think it serves a very good purpose. I am hopeful that we can find a normalcy as opposed to a swing back. And most of his final actions, like I applaud his audacity in staying on in some of the things he's doing, but I do hope that we can find some middle ground between Mulvaney versus a Chopra of like, can we find someone who takes the job as a steward of consumer best interest in what they go pursue? Right?
I mean, particularly when it comes to the rulemaking formulations, right? I mean, I'm unfortunately been around long enough that I remember when the payday rule or the small dollar rule was first introduced, and here we are probably about a decade later.
Yeah.
And I actually can't even tell you if it ever went into effect, and if it did, in what format.
Yeah.
So that pendulum back and forth, I don't think, doesn't serve consumers well. It also doesn't serve industry well.
Yeah. Well, I mean, let's hit the penultimate. Pick your battles. Really going after Google Pay for a product that doesn't exist anymore. But let's go hit fraud. Ron Shevlin hit a big piece of this. Is like, if you're going to do anything, hit the Cash App sells. Don't discriminate between the big banks and small banks. Go attack fraud, right? And who owns authorized push payment? I don't think it actually is necessarily the sending bank. I think we need greater accountability to the receiving bank, right? Like somebody failed at KYC, KYB. If
that's where the fraud payment is going.
Right. If that's where the payment's going and you're not doing a good job of shutting that down, that's where the pressure needs to go. And so these more frivolous, pieces, that's what frustrates me, where it was a little more grandstanding.
Yeah, it's been interesting. I mean, to use a sports analogy that Mikula loves, this kind of reminds me of when, like in basketball, there's a player who does something and they do something wrong on the court, and the coach gets mad, and the coach has like the person come off the bench to go in, but they can't get in the game right away. But the player on the floor knows they're about to get yanked out of the game, and so in the last 30 seconds, they're getting up 14 shots and playing the max way that they want to play before they get pulled out of the game. Like that's very much the energy right now, I think, with Chopra. And it's funny because some of the things are putting a bow on long-term projects that he and the Bureau have been working on, like open banking, right? You mentioned FDX and designated them as the standard-setting organization. I've described that as like a game of chicken between FDX and the CFPB. And he swerved at the last minute and he admitted that they were going to be the standard-setting organization. In other cases, it's like, let me play the hits one more time. And that I think is like going after Equifax, going after Experian. Those are targets that he likes to hit, and he's going to do it one more time. And then there are other ones where it's like, even now at the very end, he's like, yeah, we're going to open a process to solicit feedback from consumers on this thing that's going to begin a 5-year journey of making a new rule. So the CFPB, I always like to remind people, it's a young agency, right? The OCC was created during the Civil War. The CFPB was created 12 years ago, right? And so it's very different that way. And it just hasn't had time to establish what is its culture? What are the norms that you're supposed to uphold if you work in a senior position at the CFPB? And we've had so much whipsaw and so much politics around
from
it.
the outset, though. Right?
Yeah, it was always inherently politicized.
It really was,
because of it's where it came from.
Well, and if you can tell its youngness by anything, it has the best office furniture. Right.
This is a real thing. Actually.
I will say, I was in the FDIC office in November, and I did feel like I went through a time machine to the 80s.
OCC is kind of similar, actually. Yeah, no, that's a really good point. I mean, they're just newer in a lot of ways, and that's I echo your point. It's not bad. I think some version of the CFPB needs to exist, but yeah, I almost want to travel forward in the future 100 years and find out what does the CFPB look like then, and what's the culture? Because it eventually will happen, but it doesn't exist in that way yet. All right, so to wrap up, Henrichs, you might know this, but before we let people get off the show, we have them rant about something just in the news or something that's been bothering them. I have one I can go first on that I can't let go. All right, you guys think about it. So my thing that I can't let go right now is on the plane down to Salt Lake City, actually, I discovered that there is a ability on Polymarket, the predictions market, to be able to bet on whether Mark Zuckerberg is going to get divorced in 2025.
Based on the inauguration?
Yeah, based on the inauguration. And I was thinking the loop that we've been sort of slowly building between news, meme, and gambling, that loop is now complete and it moves really, really fast. And I just want to quit society and go live in the woods. So that's probably what I'm going to do.
I don't know if I'm more disturbed about the fact that exists on Polymarket or the fact that Alex Johnson knows that exists.
They were advertising it. They were advertising it on Twitter. They came into my feed to
tell you
me
to go gamble on.
Yeah, and actually I'll tell one more small story about this. The context of their tweet was Mark Zuckerberg's wife liked an Instagram comment for something relating to Jeff Bezos or so there was some new piece of news that moved the prediction market on this really stupid and kind of gross bet that exists out there. And I was like, oh my God. So I spent the whole plane hyperventilating about this. That was what I was doing.
Not the rant I was going to do, but I can't let that one go. For me, it's meme coins.
Sure.
Thank you.
Specifically, when we get into this, what we're calling investing, that is really gambling and the gamification.
Sure.
It really do worry. As a huge fan of Robinhood.
Gambling with none of the regulations that gambling
None of the regulations related to it. And you really do worry about, I think it was either a Wired or a Vanity Fair article talking about the impact on specifically young males in the Robinhood effect, right? Like there are some things that are not meant to be gamified and that do need regulation. I'm not a fan of regulation for regulation's sake, but we are like giving people like access to things that they should not have access to. It's like when I hear people, and this is particularly rampant in Chicago, it's like everyone should be an options trader. It's like, no, not everybody should be an options trader. Like
most people shouldn't actually.
No, you shouldn't. Just because you took a course for 5 hours does not, and you follow some people talking heads on CNBC does not mean you are qualified. Or now
it's like you're on Discord and it's like, I've learned everything I need to know. I can do this.
You should know.
Well, there was a recent study. It was about sports betting, not meme coins, but about incidents of domestic violence in like hometown teams who lost that game.
Right.
Yeah.
And
the relationship
difference between markets where people are allowed to bet and markets where they aren't. And I'll let you guess which one had higher incidence of domestic violence calls after the hometown team loses.
Yeah. No, it's horrible. It has real world impacts, right?
I know we're probably over time, so I'll keep mine short, which is I can't believe that Chopra might be going out of office without taking an action against Tomo Credit.
Can we just throw in Solo Funds too?
He filed a suit. Well, they filed a suit against Solo Funds.
Yeah.
So we have a couple of last please, if for some
Christmas
some
wish list.
way that Chopra hangs on by a miracle, by the time you all hear this, we'll hope that happens. Jason, thank you so much. This was really fun.
Yeah. Till next time.
All right.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.